I'm wondering how much this European rally is premised on the idea that European central banks are going to be cutting rates. And I'm wondering what that rally therefore looks like if they don't in the same way as the market currently is anticipating.
Absolutely. I mean, we've been saying this for some time, and I believe that there is a disconnect still between not necessarily the timing of the first cut, but the extent of cuts. I think more broadly for Europe and the UK, I don't think necessarily are matching up with market expectations. Do I think that could cause a dent or a pause in rallies? Absolutely. But actually, I think so much of it is reliant on what you were talking about earlier, and that is the strength of the consumer story. That remains really quite a really strong underpin for a lot of these businesses, and also the margin story. So we know that margins were going to be difficult to inflate this year, but actually overall the picture there isn't as bad as expected, and that is what really analysts and the market have a really keen eye on as well. But what I would say, just to slightly contradict myself, obviously as we head into these summer months and the corporate news starts to slow down, the emphasis on the macro does start to get highlighted because there's nothing else really guiding markets. Yeah. So actually, for now, I do think that interest rate story will probably carry even slightly more weight than usual.
But okay, let's pick up on the consumer and talk more about that. Why do we keep underestimating the consumer, even the European consumer? There seems to be this expectation that the consumer is going to roll over. And we continue to see strength, particularly in the States, I appreciate, but to a certain extent here in Europe. We're about to see the football kick off as well. You've got the Olympics coming up. It's a big summer in terms of consumer spending. How do you think that gets reflected in valuations? How does it get reflected in anticipation, actually, of further spending?
Yeah, absolutely. So you're absolutely right. I think really what people are concerned about, and by people I mean the market, there seems to be, as you say, this constant drip feeding of fear that, okay, now is the end of the road. Now we have run out. And I think that has stopped valuations from really peaking necessarily to where they deserve to be in the case of some of the high caliber travel stocks, and particularly you were talking about earlier. But I do think that in terms of the mismatch, in terms of why that's happening, is as much as, yes, we are seeing consumer resilience, it is not evenly spread. So this isn't a broad-based kind of rally in terms of consumer spending. They are still being discerning. Certain travel airline in particular are doing much better than others. Zara's doing brilliantly, but other mid-chain fashion isn't. So we are really seeing a very dramatic version of best in class being rewarded here as well. So it's not a case of this is a rising tide that lifts all ships. I think that there is a lot more specific stock stories going on here, and they are obviously harder to discern, and you're not going to see those broad-based moves.